So you've had the misfortune of encountering or suffering a casualty loss, and now you need information on how you deduct that on the tax return. Hi, Bob Jennings here to try to answer those questions for you. Let's make sure that we understand the 4 things that are required by the IRS for us to be able to deduct a casualty loss. Of course, a casualty loss can include such things as fires, car accidents, theft, storm damage, wrecks, you name it, just about anything that you think that would come up that would be a casualty will qualify. There's our first test. Test number 2, in order to deduct a casualty loss, it has to meet 3 tests. It has to meet 3 rules. It has to be sudden, unusual, and unexpected. What does that mean? As you can imagine then, fires, storm damage, wrecks, etc., sudden, unexpected, and unusual. Yes, it meets all those tests. Examples of things that don't qualify as a casualty loss are things such as progressive deterioration like termite damage, mold in many cases not deductible, similar types of situations. So our first point is you have to encounter a calamity of some type. Our second point is it has to be sudden, unusual, and unexpected. The third point, and this can be the hardest, and I understand many of us are watching this after we've encountered such a risk, but we have to know 2 things in order to deduct the loss. We have to have a very good idea of what we originally paid for whatever was destroyed, and secondly, we have to have a rough idea of the fair market value of that destroyed item immediately before the fire, the wreck, the storm damage, or whatever occurred. For many of us, this is a difficult thing to prove. How do we prove such things as that? Well, for example, we may need to have an appraisal on the home. Hopefully we have one in recent years. Maybe we have a list. What I like to tell people is it's a good reason to do an annual or every 2-year physical inventory of your personal assets, where you bought them, what you paid for them, and what you believe that they are worth on the day that you're doing the valuation. So our third point is you need to know both the cost and the fair value of the item before it is destroyed. Why? This is bad news, I'm afraid. The deductible loss is limited to the lesser of the decline in fair market value of that asset before the calamity occurred, or the decline in your cost. Now let me give you a very simple example. Let's say you bought your home in 1980 for $60,000, okay? Let's further say today it's worth $250,000 and it's destroyed in a tornado. Okay, your cost is $60,000, your fair market value is $250,000. Under the rule we just went through, your loss, I'm sorry to say, is going to be limited to a maximum of $60,000. Why? Because as we said, it's the lesser of the decline in cost or the decline in fair market value. Once you determine that loss amount, let's actually determine how much you're going to be able to deduct on your return. Step 1, determine the deductible loss, whether it's decline in value or decline in cost. Step 2, subtract from that amount any insurance payments that you receive, which right away should tell you many of us aren't going to get much of a benefit on our tax return. Step 3, for the year 2009, you'll subtract $500 because that's an artificial number that Congress has said you have to subtract. Think of it as a deductible for tax purposes. Step 4, you then subtract 10% of your adjusted gross income. Now, if you're following along with me here, you understand that there's not a whole lot of people who are going to be able to deduct casualty losses. So let's summarize what we are. You have to know the cost and fair market value as well as you can come up with it immediately before the event. You then determine the deductible loss, whichever of those two is lesser of the numbers, then subtract out insurance, then subtract out $500, and finally subtract out 10% of your adjusted gross income to determine the deductible loss. Now this loss gets entered on the itemized deduction schedule, Schedule A, that your tax professional can figure out for you. For more information, please contact us at the website at the bottom of your screen, or feel free to call us at the number that's on your screen. Again, casualty losses, I hope I've covered them for you. Bob Jennings, signing off. Thank you, my friends.